A few years ago, someone taught me a key lesson about lot sizes, leverage, and how to really calculate risk management. So I'm going to be doing that in today's video. So grab a pen and a notebook and let's jump straight in. Right, so the first thing to really take away from this is that one standard lot, so 1.00 trade, is $100,000 worth of notional value, or known as buying power. This is the value of your position that actually gets transacted through to the market when you're actually trading because of leverage. Most brokers, most funding companies give you high leverage, which there again gives you a higher buying power, or alternatively known as notional value on the positions that you trade in. 1.00 does not by any means necessarily mean 1% risk on your account. Second step, a one standard lot trade is roughly around $10 or £10 per pip that you trade. Should you go ahead and risk 10 pips, 20 pips as a stop loss, or the 1.00 trade, you are risking $200 on that position. Depending on the broker that you use or the funding company that you trade with, that value per lot might be slightly lower, but I would just recommend sticking at £10 or $10 per point to fully factor in that risk per trade. To demonstrate what notional value actually means, I want you to think about what leverage your trading account currently has. Most brokers and most funding companies will give you the highest leverage possible. Most funding companies give you 1 to 100, and there are a lot of retail brokers out there that even give you access up to 1 to 500, 1 to 1,000 leverage on your account. Now, what I want you to go ahead and do is take your account size multiplied by how much leverage you actually have. For example, if you're trading with $1,000, I want you to go ahead and times that and multiply it by 500. What that's going to give you is 500,000 worth of notional value, or known as buying power. And let's rewind a little bit. One standard lot is $100,000 in notional value. So there again, if you have a $1,000 account, you have a 1 to 500 leverage, and that's $500,000 worth of buying power. That means on a $1,000 account, your max lots that you can place is 5 lots, which you shouldn't even be placing 5 lots on $1,000, but that's the power of leverage. Several years ago, when ESMA regulations came into Europe, and the regulations in Europe went from 500 to 1 all the way down to 33 to 1, I personally thought, oh shit, what am I going to do? I need that leverage. Truth of the matter is, brokers and institutions and funding companies will give you that leverage. They'll give you that buying power. They'll give you that notional value because it makes you risk more. It's going to make you lose quicker. That's money in their pocket straight away. The minute you're losing, straight away. Profit for them, right? So think about it. On a small account, you shouldn't even be risking that much. So let's dial that back. If you're trading with a $100,000 account for a funding company, or you're trying to get funded and you're risking 1%, you're risking $1,000. If your average stop loss is 50 pips, you should be trading no larger than a size of 2.5 lots. How did I get that? 2.5 lots is $25 or £25 per pip. If you've got a 50 pip stop loss, that's $1,000. No more than that should be traded. The issue with a lot of people who are struggling to get funded, struggling to keep funded accounts, or even managing risk on their own accounts is understanding the true value of a lot size and understanding notional value. You do not need high leverage at all. Scratch it out your books. Trust me, you will trade better as a trader with a lower leverage. It gives you tight parameters to trade within. Even if you feel greedy, even if you want to up your lots one day, you can't because you don't have that notional value. Let's just say you have 30 to 1 leverage, right? You're trading on a 50K account. Let's do the maths on that. 50,000 times by 30 is 1.5 million in notional value. Meaning, if one lot is 100,000, right? 1.5 million in notional value is 15 lots. So on a 50K account, you wouldn't be able to place more than 15 lots before it would say insufficient funds, right? Not enough margin. That's a good thing. You don't ever want to get into that habit and get into that routine where you might think the trade looks extra good. The trade looks super good from where it is. You might want to throw an extra few lots on. I've been there. I've done it. It is not worth the risk at all. So please do understand what notional value is. It's your buying power. It's how much leverage you are given from the broker to place those lots. And just to break that down once again, a 0.10 will then be £1 or $1 per point, depending on the currency of your account, and also how much exposure that broker is giving you. There are instruments that have slightly less, but that is obviously the exposure that the broker is giving you per lot, or per standard deviation of a lot that they are giving you to trade with. 0.25, $2.50, £2.50. 0.50, £5 or $5 per point. One standard lot is £10 or $10 per point. And there again, folks, please remember, you want to think about that before you even place your trade. Before you even going to go ahead and enter a trade, figure out what it's going to cost you should you lose that position. I know there are a lot of apps and a lot of tools that help you choose your lot size, figure out price per point and so forth. But understanding the simple value of what one standard lot is actually worth in notional value and in money's worth, right, in terms of risk, you're really going to understand and think about it and look at it for face value and really understand risk on your account. But I hope this video helped you. If you did like watching this, please drop me a thumbs up. It really means a lot. Like, comment, share, subscribe, and I'll see you guys in the next one. Take care. Bye.